Hello everyone, very good morning. Am I audible? So can someone confirm if you are able to hear me well? Am I audible? Hi Vijay, how are you? Am I audible Vijay? Hi Lalit, very good morning. So like I said, every dip is a great opportunity. We had a gap down and then Nifty has made this low. Positionally accumulating makes perfect sense here. You want April month end or May month end, that is something that I would voice not clear. Just a moment. Let me.
Hello. Hello. Am I audible? Hello. Am I audible? Hey guys, just do let me know if I'm audible. Is the sound quality better? Oh, great. Thanks, Nihar. I think the port was changed because my baby has pulled the cable and it was wrongly put in another slot. I just fixed it. Hi Nihar, so what's up? How are you? Zoom in, and I was saying that in our group, any dip is a great opportunity to accumulate calls positionally, and that's what I would do. And it's good that the market has given a gap and then it made this you know spike on the lower side. Excellent time to accumulate calls positionally. Oh, so in 1 hour time frame. So, so if you look at this, it's making a perfect ascent. Very good moves are happening. Clear trend in 1 hour time frame. A channel is formed, and on the upside also you can see that there is a channel going right. So this channel is very important. You can get this channel in 1 hour time frame, and this acts as a very strong support and resistance points. Near, are you still there? I don't know if there is any issue with the stream or stream is working fine. Just give me a confirmation. Okay. See, Nihar, you're asking, would it not hurt? The TK, Theta DK will not hurt. Of course, it is going to hurt if you are playing in a shorter expiry. That's why I'm saying that we should play on at least next month in contracts. Uh, I understand that a lot of people don't have big capital and they play weekly expiry because the premiums are something that is affordable. But whether affordability is the question or you wanted whatever is there in the account you wanted to play it safe, that's the question, right? So in that light, if you're instead of buying say 150 quantities in current week, you are able to get only one quantity of next month end contract. It is still good because it acts like future. there is absolutely no theta decay. For example, if the market goes down like say 100 points and then comes back to the same level, calls are holding up the premium absolutely crazily. There is no theta decay at all. So it acts like a future, right? It is acting like a future contract. Hi Alex, very good morning. How are you? So theta decay, you should be worried. For example, yesterday, if you look at it, I will talk about this one. See, yesterday was an expiry day, and if you look at this 22,500 call option, it was day before yesterday around the close. It was trading around 82 rupees. When the market opened and then it went here, it became almost like 18 rupees or 16 rupees. It went, yeah, 16 rupees. It went in this. I'll talk about it. Let me just talk, clarify what I am trying to say here is um, 22,500 put call option. When the market fell, it went to 16 rupees or 14 rupees. And then when it bounced back, it reclaimed entire amount and then it went even like 140, 150 it went, right? Even on an expiry day, calls are holding up, but the puts were not, appreciating at all. Towards the second half, puts were not appreciating. Even at the last moment, ignore the 3 o'clock to 3:30 time, but before that, between 2 to 3 also, calls were appreciating. Calls were holding up their value. Even the contract was expiring on the same day, right? Now we are talking about something that's going to expire next month end, right? Maybe you bought something at 250 rupees. With this gap, it has become 220 rupees. It just needs to come and fill the gap. It will be already higher than your buying price. That's the beauty. It's appreciating disproportionately on the call side because there is a bullish sentiment, right? Those sort of things only when you take a positional trade, maybe one lot, and then hold it and observe, you will be able to see that. What Sensible says, for example, you create a short straddle or whatever position, and then market closes today, tomorrow it opens, and then it shows like 5k profit like that. It will show based on the calculation. Trust me, in last 1 month or more than that, never it has even given a profit 20% of what it is showing. For example, say I take some sort of short straddle today evening, market closed, there should be some theta decay, right? And then next day morning opens. Ideally, it is saying there is a theta decay of about say 10,000 rupees. When the market opens at 9:15, it's not showing 10,000. It's only showing 1,500 rupees or 2,000 rupees because the premiums are holding up. It's not decaying on the call side. Okay, because the call side premiums are more. It's projecting the earning inclusive of the calls, but the calls are not eroding only. Only the put side is decay is happening, and the call side is in fact appreciating. So whatever I'm gaining from the put side is showing as a loss in the call side, and it's not happening. But towards the end of the day, the premium gets adjusted to some degree, and then never it comes half the value also. For example, today, if the theta that I'm going to collect is 10,000 rupees, by the end of the day, I'm collecting only 5,000 rupees, right? These sort of things would happen. Uh, and it requires very different way of tackling that. I will talk about that another time. Like, to put it simply, what you can do is book the legs that's uh, on the call side. You just maintain it, don't touch it because it's blasting like anything. Put alone, you just go on, make adjustments, and then collect the premiums. And call, you're writing because in case of black swan event or any sort of sudden fall, that question should be there, because a lot of you might be saying that, well, then why to initiate a call side writing? Call side writing is only because the premiums are so much. For example, ATM may be like 120 rupees for put, and call maybe at 200 rupees. So I'm getting covered for 200 rupees, right? So that is needed. You should never let that go. Okay, now answering the questions. Alex, yeah, Ruby is great. Thanks, Alex. Oh my God, yeah, she's running all over the house, and then keeping very busy, running behind her all the time, not getting some breathing time. Although just she is so super active. So, are you describing which strikes like ATM, ITM, or OTM? So, um, i- if you're going, I will probably make a note over here so that let's talk about next month end contracts. Okay, if you're going, uh, if you have some good capital, then you should always stay with ATM. Don't go for ITM strikes in next month end contracts. It's not worth it, because already ATM itself is acting like ITM only. We have got the time. Why we are doing ITM buy? Because there is a theta decay. You want to tackle the theta decay and give yourself some sort of buffer. For that, you're going for ITM in current week and next week. But when you're going for next month end contracts, you're already paying a premium. You're paying double the price of what it is currently. In current week, it might be around 150 rupees, but next month end contract will be say around 400 rupees. Already paying 2.5 times more. Now, why do you want to buy ITM? So it makes no sense. ATM is fine, or ATM plus 200 range in call side alone. I am talking about, right? Puts you wanted to take, I would say that if you are really wanting to play on the put side, then you should play ITM irrespective of which contract you are playing, because puts are butchered like anything. There will be only one opportunity. For example, in all these things, I will go back and show you. In all these things, mostly what's happening. Mostly what's happening. You see this. There is a rally. There is a rally. The rally, and then there is one spike. There is a rally consolidation, again some opening, and then there is one pull down. But here, if you see, it rallied, consolidated, it rallied, and again there was one day of fall, but which means 4 days of ascending, and then 1 day of fall. Now, if you are holding put option for 4 days to give money on the fifth day, you will be losing too much. But if you are holding a call option, which makes sense, because either market is consolidating or trending up, so it makes perfect sense to take call side positional trades than holding a put option positionally, unless your view is bearish, right? Uh, is that clear, Nihar? Hey, Siddharth. Good morning. Sure, you can join in anytime. Hi, Divya. Very good morning. How are you? So, I'm not, let's be very clear, I'm not saying you should take. All I am saying is that what I would do and what is my thought process. This is only about clarifying uh, ideas and providing you with logic and reason. Right? It's not asking you to take any position. Let's be very clear. We are not here for any sort of recommendations or advisory things here. We are purely doing a learning um, discussion over here. Oh, great, Divya. Um, So let's let's do one thing. I will, in order to provide some better insights. I think most of you are trading in Nifty. So let's take Nifty and do an analysis. Because quite often I am saying that go positional, do not trade in this market in weekly. A lot of people will feel bad about it, or why is he suggesting some far off strikes? It's not appreciating faster also. For example, in current week, yesterday, if you saw, put option at this point was at 8 rupees. I'm talking about 22,400 strike. 8 rupees or something it went. And then when it went here, it was like 186 it went. Okay. And then again, when the market went up, it became zero. That's another story. Now, look at the swing in the premiums in current week. Something that closed at, we are just analyzing it. Yesterday's expiry, we are going to discuss this a bit detailed, because one of the ways to understand what we should do in the market is to go back in time and see what happened on the previous day, how the expiry played out, and is there something that I can learn, right? This is where you have an opportunity to create strategy for the future. If you don't do this analysis, then you will not be in a position to, you will be making the same mistakes over and again. There will be no refinement happening. So put option closed at 109 on Wednesday, right? And at this point, when market opened, it went to 8 rupees, I believe. With fall, it reached to how much? 186. And end of the day, became zero. Now 100 to 8 rupees, 100 rupees fall. From there 186, almost 180. So 300 points of swing is happening, right? 300 points of swing. Now you may be saying, sir, if I am getting this right, then I stand to gain 300 rupees. Why should I not play in current week expiry? Very logical, very correct. But do you have that much of capital to accept if it becomes zero by the end of the day? That's one question you got to answer. If the answer is no, then what can be done in order to mitigate the risk? Okay, I wanted to play in this, but then how do I mitigate risk? Can I do writing? Do I have capital for writing? No. Then don't do it. Don't do in current week. Either you have some protection for the current week through writings. You don't have that much of capital. Uh, just go for the next week contract or some other contract. If you have good money, then why do only buying? Do writing. Club it with writing. If you don't have money, then why risk? Again, it is a very big thing, because these sort of swings will wipe off the capital. That's the risk that you stand at. But let's go and check 22,400 PE of next week. You do a study. I'm not going to tell you anything. This is next week you study. Uh, Current month end you study, and next month end you study. Okay, so this is one thing you study after the stream, or now only you just open. There are so many sites. You see what is the open, how the price has moved, where it is trading currently, all these strikes of different no expiry. Study that, and then at the same time you also go and then study 22,500 CE yesterday expiry, um, current week, now it is next week, right? Next week expiry, then month end, and next month end. All the premiums from when you I want you to study Wednesday close, Thursday yesterday's range entirely, like what is the swing and where it is today, exactly as we are talking, where it is today. You see, tell me how much uh, call have appreciated as compared to Wednesday's close, and how much put has lost its money uh, compared to Wednesday's close. Wednesday's close will be the reference because whole day of violent moves and then eroding of premium. Which side has lost the money? You should know, and how much it has lost, and see if it is worth carrying. Current week strike overnight position is better. Next week or next month end, do this analysis. That will help us understand which strikes can be carried over and how much is the risk. Oh, great, Siddharth. That's great. This policy unchanged. Fantastic. Sure. I think, oh, policy is unchanged. Okay. So if you guys wanted to take a screenshot of this, I will also paste it in the group. None of them will understand anything if they have not. So this is the study challenge. Go ahead and study. You will get to know why I am saying that accumulating call side positions is fine, no problem. Despite the gap down, you're still not in a bad position. Maybe range bound today. Uh, I mean, it will be disappointing as a buyer to hear this, but Fridays are used for um, creating positions, writing positions. Writers create good positions on Fridays because tomorrow, Saturday, day after tomorrow, Sunday, they wanted to collect the premium, and they will not be creating positions anywhere. They will uh, spike at one side, take positions, then bring it down, take positions. Both the sides they will take it in inflated price, and then let it run for the weekend for erosion. So typically, what they will do is now look at this range. Oh, and then this range. Let's ignore the spikes, right? Hardly how many points? Um, Let me calculate this. Price range. Let's do this from year to year. 30 points range it is. Hardly 30 points range. They're keeping it, right? Now, you are seeing this level of volatility yesterday. And this sort of trend the previous day. hardly there is any consolidation, right? It is coming down through the day. It is trending. You are trained to see so much of these, trends, and people will be so desperate. What if it breaks down? Breaks down. What if it breaks up? Having seen that first 90 minutes giving a huge breakout, you will create some positions, and usually that position will be wrong. Okay, maybe you are expecting it to fall put side, you would have taken aggressively. Seeing this, see this fall. Now seeing this fall, people will aggressively go on the put side, and what they will do, they will again get into this. Again it will go on, then try to break upside, and then people will go into call side. They are inflating. Now the put side value is inflated. This is what I am saying. They'll inflate the put side value. Now as it goes up, they'll inflate the call side value. Both the sides they will take positions, maintain it in a range, right? And they will ensure that retailers are getting trapped on Friday, so that they beat the larger chunk of the crowd for the rest of the week. So today is the day that retailers are usually trapped. So don't think that it is put side now. In fact, it is a call side thing now. Hmm. So it's not range bound. It is going to be a trap, and then there will be a directional play coming when we expect the least, probably around 12 o'clock to 1 o'clock. We can expect some sort of directions. How is Sensex playing around that? We got to see. So this is the range. No. Yeah. So perfectly, they're going back again. You see? Other thing is that there is a gap, and then the market, as it breaks here, you will think that it is going to fill the gap. Today it's logical, very logical, and any day I would also say that it is going to fill the gap, but not on a Friday. uh, just because it is Friday doesn't mean that it will not happen. The context to why I am expecting it not to break out immediately on either side is last 4 5 days there has been so much volatility. There has been enormous amount of moves on both the sides. Now there is a trend pattern that they have established. Psychologically, you know that the market is going to move violently, and you are expecting such a thing. And that's when they will say that no, it is going to be tight range, because that is where you will lose money. And say you have 1 lakh, you would have already by this off time over here, you would have deployed some 20,000 rupees, and then definitely it must be in loss. Now you would have gone and then did some averaging, and the more time passes, the premiums will erode, and then you will almost deploy all your money before even the breakout, and then they will see which side people have pumped all the money and go the other side. Hi, come on. Ah, come on. Fuck this. Mm, yes. You me. Wow. Look at this now. Let's see if they are going to break this or it's going to come down. You see how what happened. So one of the trick is that market doesn't do anything today to trap you. Market is setting you a trap for today 2 days before, okay, or last week. The traps that we see are not of today. For example, if you're expecting a breakout, it's not that they are setting a trap today, right? They have already trapped you when they started making these moves. How it's a trap? You are given a psychological trap that market is so volatile now that there should be some moves. And that's what they want you to believe. They want you to believe that it is going to move extremely volatile and then I can make some money. That is the trap that they established in your mind. And how they established it, not just yesterday, they did it consistently. More than Bank Nifty, Nifty is like you see this. Look at the kind of rally from 27th of March. What has happened? It has rallied. And show me a day where it consolidated. It just fell. Again, there is a trend. Again, what happened? Even here, it is like gradually going down. It's not like, yeah. So there is continuous trend all through the time, which makes you think that okay, today is going to be uh, again trending day. But uh, this is where they use Fridays to create questions, which will trap you for the next week. The camera is too low. Yeah, correct. Sometimes there are phases where they make you believe that it's going to consolidate. There is no money in the market, continuously consolidating. You know that it is going to break up on the upside or downside. You have some waves. You are expecting it to break out today. You are taking positions. Nothing is happening. You are expecting it next day to happen. Nothing is happening. Finally, 4 days you have been waiting, and as a buyer, you have 4 days of wait in current week means almost all the premiums will be like 60% of the premium will be wiped off. Now you are expecting a breakout, you don't want to hold. You will close that position. The moment you close and exit, the probably on the same day after 1 hour you will see a breakout. Right? You would have seen that happening time and again. So it's the counter part now. They have consolidated. They have been trending for so long. Now they will trap you with the range bound. Hmm. Hmm? But, hmm. So uh, is it going to be range bound day for some time? Yes. Is it going to trend after some time? No. What they will do is they will probably, most likely, what I am anticipating is that they will consolidate here and do a break on the upside to fill the gap, but then get back here and then take a support. Probably somewhere around here they will close. And what is that between here and here? What is the round strike that I see is 22,500. It's a perfect psychological strike. So writers most likely would be creating a position for next week around 22,500. That's what I am. This is not an analysis. This is only thinking what would big player do to trap. All right. Stuck, I think. Hmm. So, you guys have any questions? Feel free to ask because I don't want to keep talking without any questions. Uh, I would rather save some energy for questions to be answered. Let's check what Bank Nifty is doing. Bank Nifty. Same thing over here. Only thing is its volatility is much higher than Nifty. So the range is, of course, this L2 to this peak. How many points? How many points this is? 967 to 150. Looks like a bigger 180 points range it is. So very difficult to see that. Uh, but Nifty is very obvious. There is no big deal. So in this 15 minutes candle, all the four candles are of equal length. Just this, I will copy. Maybe can draw it here again. So Nihar is asking, let's say someone has written as strangle or straddle. Be very specific because both are different. The adjustments would be different. Strangle is, so is it a single strangle or a multiple strangle? For example, are you writing only one strike on the put side and one strike on the call side, or you're writing two, three legs, like say 47,000, 47,500, 48,000, all these strikes you are writing, or how it is? If it is single strike, very difficult. Let's assume you have capital, then it's not difficult. Uh, if you short, yeah, basic short strangle, one lot you have. Oh, they are breaking up, guys. Fantastic. Wow. Yeah, anyway, let me talk about that. What happens is, say, go to single window. Okay, here we will use the space. Okay, now what you have done is, let's say you have written 47,500, 47,500 and 48,500. Okay, this is the strangle that you have done. Now what will be the payoff looking like? Like this on the day of expiry. But the current one will be like this. Supposedly you have taken a position here. I think the curvature will be even sharper, not like this. It will be like this. So you have taken a position here, and then if the market moves now only, then any side it moves, you are going to lose money. Right away, you are going to lose money. So when to do adjustments? Now you decide. You got a 1,000 points range, and let's say this is your position, right? Now this is 25 percentage. This is 25%. Sorry, this is 50 percentage. This is 50 percentage. If you are doing adjustments too soon, then obviously you are going to be left with no capital if there is a trend continuing in one direction. For example, it has moved this side. You took a position, immediately it has moved here. Now should I do an adjustment? You ask yourself, what is your outlook? Okay, the market has moved here. Now what is your outlook? Is it going to be bearish or is it going to be bullish? It will be, you are expecting it to reverse because it's a 61 percentage retracement level. You got to club with that and decide whether you need an adjustment or not, right? If you are clueless, the safest thing to do would be, say that the puts, say you have written here, and 300 rupees. Okay, call premium was, let's say, 150 rupees. Put premium was 100 rupees. Okay, when you initiated, let's simply give this as an example. Now market moved immediately to like say 300 points. Or let's say call price had become 70 rupees and put premium has gone to say 180 rupees. Now how, let's say 200 rupees, okay, because it's 300 points move. Put has gained and the call has lost, but since call premiums are not no, it won't depreciate that fast on the call side. So 70 rupees means 80 rupees you have gained on the call side, 100 rupees you are losing on the put side, correct? Because it's a short strangle. Now you are in a loss of 20 rupees. 20 rupees is nothing. When theta decay, when the market closes and opens, if it is same place opening or it is going to be a small pullback, you don't have to do anything at all. That is one. Now, second thing is that club this information with your fresh market outlook. What is your outlook after the move of 300 points? Now, what is your outlook? Has it changed? Is it in line with your prediction? Is it going to be? Is it just retesting, retracement testing, or it is breakout trade? Whether see the market can move 300 points, that's not a problem. But there are certain places where you don't expect the market to break. Oh, this one doesn't have or what? Okay. Let's do double. Here you can see some range. Where is that? Okay, let me draw here only. Single. Let's say this is a zone that I am expecting it not to break. Let's say this is a zone that I am not expecting it to break. It has come down and say 300, 400 points of fall. Market has come and then tested over here. Now, should I do an adjustment? What sort of adjustment should I do? Should I go ahead and then write one more put? Should I go ahead and then buy a call? Or you are expecting it, if it is, what if it breaks? You might be wondering, what if it breaks? So you might additionally add more call questions. A lot of blunders happen in this zone, and the market has moved too fast. Even as a writer with lack of experience, you will make a lot of mistakes. So have an outlook. Once you have an outlook, you say that okay, I feel this range is breached and I expect it to fall further. Let's say that our view is the zone was here, 300 points fall has happened. Although I have coverage till 47,500, it has broken this level and then currently trading here. Now you have a different outlook that the market may go down from here. Now I am asking myself, okay, if that is the scenario, where it can fall? And I am anticipating it to fall, say, till here, or maybe till here, let's say. Okay, because 1 week, this is the range I am expecting. It has broken this level, and I am expecting it to come and test this. Now, it is going to come and test this level. I should be prepared for an event where the market is going here. Now, how do I do it? You have many different ways of dealing with it. Maybe one of the things that you can do is to, there are many things you can do. That's what the option writing is. Maybe you can close this 70 rupees leg and write another strike which is having more premium. Okay, that is one thing. But the risk is, if the market reverses, then you will be losing money on the call side as well, and the put side is already like giving you a big loss. Both the positions will be in loss. As a fresher, you have to keep whether you are in profit or not, because you have already closed this position at 70 rupees and then freshly you have written 120 rupees value, let's say, and the market has gone up from 120, the call has become 200, and the put has come to the same price as 100 rupees, now you are in trouble because you got to keep track of how much you earned, how much you lost manually. That is the risk. So that is a very laborious thing, but sensible is there. You can just add things and then keep virtual trades. You can basically manage. Another part is that okay, 70 rupees this is, and I'm expecting it to further fall. Let me go ahead and then close this leg at 200 and write another put which is of 70 rupees. You can do that, or you can maintain both these legs, do a fresh straddle or strangle, extend the range. So many things that you can do. You have countless number of options. Probably you can also do a calendar spread. For this week, I'm expecting the market to come down, but next week it should be bouncing back. If that is the scenario, then write puts at the lower. The more it falls, you write the puts of next week, and let the market continue to go down. That is all okay. And as the position reverses, say it reclaims, let's say it has broken this level, it has come down, and here at this point you can take next week contract, write the positions, but to do that you got to be very sure that it is going to reverse from here. Everything is based on your outlook and how much money you have and what sort of capital you have for what sort of adjustment. Do you have enough money to create a fresh position? Then you are in good space. You don't have to really close the original position. Rather, you can extend the range. You can do some sort of pyramiding. You have tons of ways to manage. Does it answer, Nihar? Yeah, writing. See, anyone can write, right? What is so special? You have money, you just go ahead and then write some 500 points away. There is one strike, and 500 points away another strike. What is so big deal? Like any person can create. Someone, living with the market can also create this position. Someone who just started today can also create this position. But where lies the difference? What is that somebody with rich experience and a pro will do that a, a fresher will not do. I am telling you, the same position, somebody with lack of experience will make a huge loss. Somebody with uh, good experience will double their money. When the market moves against them, they know how to double the money. Probably here it was showing potential earning would have been only like 5k, but since the market has moved too soon and they have certain discipline, they have certain way of risk management and deployment, they know if the market moves, it's good for them. They will wait for that, create a fresh position, and now the range will be something like this. Probably you are fighting to hold this in profitable zone, but what they are doing is if the market has moved too soon in this direction, they would have created a position that would have made the range like this, and now here they are instead here they would have earned only 5k, but here they are earning 15k. You see, they see this as an opportunity for earning more. There are ways to do that. So it's all about when you're writing, it's all nothing fancy. It's about three things: money management, risk management, and then uh, adapting strategies. These are the things. That's all. Nothing else. Now, these guys don't have to worry about some intraday spikes. Today, RBI policy, market will not crash. Market will not fire up by 2000 points. It's not Corona thing, right? It's just a policy. A market can give surprise move. Nifty can move, say 300 points or upside, or 400 points, 500 points in the downside. That's it, right? You don't collapse like 2000 points. Nifty will not collapse like 2000 points. So they know those sort of black swan event they have to fight, and they are always, it is there in the back of their mind. In general, they know there will be some or the other events and news. Market might surprise by giving some unexpected 200 points moves, but they are not bothered about 200, 300 points moves. They are happy because they can see that as an opportunity to earn more. That's the difference. So I think having a paper trading terminal and practicing is more important over the mm, paper trading is fine. Only thing is the seriousness of paper trading is different from real market situation. Uh, Suggestion would be to you start writing with one lot. Do the adjustments for one lot. Practice it for about 6 months. See how you are managing it. Probably you will not be earning anything at all because say one lot means you are blocking 1.5 lakhs, right? Now for this 1.5 lakhs, maybe you are doing some adjustments and all these things, you need another 1.5 lakhs, right? Let's say two adjustments should be good enough. Most often 80-85% of the times two adjustment is all needed. And if everything goes well, probably you are earning say 10k. Okay, this is as a writer. Now as a buyer, you see that, my god, if I have 1.3 lakhs, 3000 rupees every day I will make, right? So which means what I am going to earn for waiting over a week, I can just, if days are good, nobody makes 3k and all. If they have 3 lakhs, they expect 3 lakhs. Some people, but say to 10k people are expecting. Okay, now one day only I'm expecting 10k. So there is a psychological thing. You as a buyer, you have been a buyer and you wanted to, you see that, okay, if I'm waiting for some 5 days to get 10k, this is an opportunity wasted. So realistically what you will do is, I have to make money, let me not do writing, I will close my positions and then switch to buying. If I am seeing loss, immediately close the position, do some sort of stupid buying and lose more money, right? Typically this is what will happen. Now the discipline is, I am not here to earn money for this week or next month. I am here to earn for life. Or if I have to earn for life, my age will change, my health will change, and I cannot be suddenly adapting a new game. And I have to be very careful of choosing what battle you wanted to play, right? You wanted to play this buying business at your 60s, 70s, and then scalp, your choice. But you wanted to generate something more consistent and reliable, and you know that you can define how many percentage you want to see. It's Once you gain the experience and the techniques, you can do many things with writing. In fact, you can earn much consistently higher than what any scalper on earth can earn. There is more writing scalping you can do. Instead of doing a buying scalping, writing scalping will give you superior returns. Be a writer, be a scalper, but be a scalper on the writing side. Outstanding results it will give you. Probably as a buyer, you are waiting for 8 points. Why? You bought something, it has dropped 10 points, 15 points. Again, you did some averaging. Now you wanted some 12 points to come back so that you exit with some profit. So the moment you take position, what is happening? Immediately a 15 points fall is coming. Then I'm saying, write the other leg. On the call side, you are buying and then losing it, right? Now write the put side. If there is a fall, say about 15 points, buy it. No averaging, nothing. Just exit. You see, are you understanding what I'm trying to say? There is no averaging needed. In buying, you need averaging. In writing, you don't need averaging because time will take care of itself. So, paper trading won't work. What I would suggest is you get those not 10K for 3 lakhs, what are say 5K. Okay. Now you get this. Now what happens is you are doing it for 4 times in a month. So you get only 20K. But what would have happened is your trades, number of trades will be less than 20. Brokerage will be less than 10 percentage of your usual, and profit days and profitability is above 90 percentage. This is something. Okay, now you have to realize this on your own, and unless you see these things through your eyes, the very day that you see this happening in your own eyes, you will never be a buyer again, or you will never be a pure buyer again. I would say that, because I also do buying, but you will not be a pure buyer. Most importantly, no stress. Stress levels would be like reduced by 90 percentage. Right? So that's the kind of game. And when, so this is only to, you do this for 3 months. Oh, sorry, 6 months. To this 6 months will help you to see why I should be a writer over being a pure buyer. Okay. Then next 6 months goes into experimenting. Correct. There you will again start losing money. So you will be feeling confidence over here in the first 6 months. Next 6 months you will start losing money because you wanted to now experiment, and you will know that you lack certain things, and you will have to upgrade certain skill sets, um, become a better judge. Technically, you wanted to be sound. You will go on to invest your time into learning many different things for this, right? So the following next 6 months, what happens is, so this is first 6 months is acceptance. Next 6 months is experimentation. And third, adaptation. You're adapting. You learned something in this process. You wanted to adapt and experiment, right? Still, there is some control. Things are going out of hand, but it's not. I'm not in complete control. I still know something is wrong, and that's when you will. One second, Rumi. So here you will learn about money management and risk management. And then next to 6 months, it will shake you. There will be a terrible, event that will make you feel that, oh my God, I know nothing. They will suddenly drop or suddenly rally unexpected. You have spent almost 2.5, 3 years into this. Then something happens that goes beyond your control, and then you are losing big. Now you will have getting into the pro league now. Okay, this is where you will enter into the pro league. So you will realize writing is good, but which strike to write in which situation, and macroeconomics, how do I keep in check? Daily events, how do I keep in check? Should I maintain 2, 3 different accounts for writing itself? You will not believe you need 2, 3 accounts for maintaining writing itself. These sort of higher order learnings. So it's a journey. This will take close to 4, 5 years. Maithili is asking, where do I learn about writing from the scratch? Um, see, one, I, I can be very honest. People will say that read this book, you will become a pro. No, nothing. There is no book in this world that will help you. There is no person in this world that can give you everything that they know. Okay? See, 7 years of writing. I mean, I know the journey, how hard it is. I lost several lakhs to get this learning. Now I come in. Why should I teach anyone? I lost money. First, I have to recover what I have lost. So you learn, you lose and learn. That's what most people would do, and then they will give you strategies that doesn't work in current situation. Basically, that's what is happening, right? Probably they will introduce one technique, they will introduce certain adjustments, they will always withhold something from the public eye because that's their USP. So you will not get that information. Having said that, oh, one moment. Hello, hello. Sunil Sarji. Oh, Maithili, I will answer you. Just a moment. Uh, One second. One second, Roman. Just give me a 5 minutes time, guys. I will come back. I'm sitting also. Call is not working. I'm just going to. Okay, just a moment. I will come back. Give me just a moment, baby. Come, come. Hello. Hi, Michael. Okay. So I will talk about it, how you can get into writing. Okay. Of course, although I say that, nothing will give you, doesn't mean that you shouldn't be reading at all. There is a book called, uh, let me put it here, Bible of Options. I'm not sure if you're a part of our group. Somebody has shared some PDF of this book there. Uh, Maybe you can check the description. There should be a link to our Telegram channel. You can join in and then ask people to share it again. A lot of very kind people are there to spread knowledge and information. So many people actively share in the learning process. So you can join and get this book, or simply find it online. You can buy it also. Your wish. This is one book. Then um, there is a book. Trading in the Zone. This is for discipline, right? So these two books, read it. This Bible of Options will talk everything about all the 60 strategies. Theoretically, there are 60 strategies, but creatively, there are unlimited strategies. Okay, as a writer, creatively, if you are wanting to play, I have created. There are no names to that. There are strategies that I have created for which there are no names. Uh, so much can be done. It is countless. Textbook wise, like covered call, covered put, then short strangle, short straddle, long straddle. You will have the butterfly, iron canter, iron fly. So many things will be there. But basically, you are starting off with one established thing, but then it is, if it is so simple, everybody can make money, but everybody is not making money. Even writers are not all writers are making money. So something you got to do in order to ensure that you do differently from others. That's where your winning comes. So that's when this experimentation phase, adaptation phase, all these things will come. So finally, after this phase, when you are entering into the pro league, where you spent almost 3 years and then everything is shaken, again you lose money, you get creative, you realize that you got to create your own strategy. No, none of this works. I need to create something unique. That's when the getting deep into the pro league happens, and it's a journey, right? And there is no saturation point. Once you know how to make consistent, say for example, you have about 20 lakhs, and then you are looking at, say, monthly 3%, nothing, just like that you can make 3% is 60K. 20 lakhs if you have, and then you are not able to make 60K, you should not be in the business. And 60,000 if you are able to make consistently, you know you are far better than any mutual fund, any FD, right? So you should be in the business. So at least 3% you should be able to pick, and that's why people say that can you make 2% a month, because they know you will not be able to make. Yeah, yeah, happens. So one thing I'm telling you now, Divya has lost 3.5, you have lost 6 lakhs. So much money is lost. I have lost a lot, and it takes years for me to get over and then come out of it. I don't know when it will happen. Also, it's a very long cycle. But should we let it affect us and make something stupid today? Forget what you have lost. What you have lost, market has already swallowed. Some big guy has taken and probably has gotten a good car with that money, paid some EMIs or whatever. He has put in that money into his mutual funds. That money is gone. Don't carry that. That will only hurt you. Thing is that what you have right now, you have market experience, you have pain, and from that pain you have some learnings. And from that learnings, you are willing to further experiment and learn, strengthen your learning, right? See what you are left with. And then when time comes, tomorrow if I give you say some 20 lakhs, can you generate 3%? I'm telling you, even in writing, within 6 months you will lose all the money because you don't have experience handling it. That's why I strongly suggest get go through this process. Read the books, start with one lot, get the more time you delay thinking that once I have 20 lakhs I will be able to do, no, you will not be able to do anything. You start doing with one lot and then make whatever you wanted to lose in this when you don't have money only. Like you have only 3 lakhs, in that 600 rupees loss you are making, 1000 rupees loss you are making, fine, that's okay. But ultimately you will learn. One day you will lose 10,000. All are learning process. But as a buyer, you have lost 6.5, I would say, in one day. Maybe you made consistently money for 6 months and brought that capital to that level. Hardly 2 or 3 trading sessions, you would have lost all the money that you had, isn't it? It's never that you lost 10k, 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 and lost your 6 lakhs. You have lost your 6 lakhs in 2 days to 3 days time. Is that correct or not? And here, what I am saying is, yeah, 3 days. So capital wipeout will happen only in a time window of three days. It will not happen anything beyond that. As a writer, you will be losing over months. Like today I lost 10k, tomorrow I lose 10k. Ultimately, there will be a time where I don't have enough funds to create positions. Probably from 3 lots, I would come down to 2 lots. From 2 lots, I will have to come down to 1 lot. But the 6 lakhs, if you are losing in writing, it will be lost in say 3 or 4 months time, not in 3 or 4 days, right? So these two books you read, and you got to work with somebody who has experience and willing to share as much as they can. Okay, I'm not going to promote myself over here. I know it's very futile to get into that zone. Uh, if you know someone in your locality where they are available for a Zoom call or they are available for a in-person training, go sit with that person, he or she, learn, ask that person if I can shadow you. Just I want to watch your trades. I don't want to take any positions. For next say 3 months, what you do, I want you to simply watch. Can I? No, nobody will agree to that, but try it. If somebody is there, that will be the best form of learning. You can ask questions. Hey, you go on reading books, 500 books, pages are there. After that, you cannot create a position and then manage it. What is the point in investing so much time, right? And you're sitting next to the person, you are not learning any strategy, asking, ma'am or sir, why did you create this short straddle? Oh my god, market has moved. It's just now 5 minutes back you created. Already it has moved 200 points. Position is in a loss of 10k, and then that person is not even anxious, and then he is going on to create some sort of adjustments. You're saying, why? How come this guy is so calm despite saying, right? You will be able to learn the psychology behind taking losses, patience. You will witness more than what any book can teach. Okay? So, to start off, paper trading is good. You create it, put it in your virtual portfolio, track that. That is up to you. But what really pays off is taking live trades. That's where your understanding comes. Invest small, go with edges. If you are taking something like iron fly strategy, all you need is some 40k or something, 40k, 50k only. Um, and those sort of positions you create, you stand. If trade goes right, you win 5k. If trade goes wrong, you lose 4k. Fine, take it. Start off with some experimentation. Then you will understand the, oh my god, I cannot keep my risk and reward 1:1. Then you will be thinking I should take two times I should earn, one time only I should lose. If I stand to lose 5k, then my profitability should be 10k. Trust me, you will be losing 10k. Okay, because psychologically you will do something out of the turn, and you will make loss beyond what it is projecting on sensible. Personally, now if you ask me, say I create strategies that will give me only 30,000 rupees. Potential loss will be 1 lakh. Oh, what is this risk management? That's what anybody would ask. 1 lakh only, 1 lakh you are going to lose, and you are going to take only 30,000. Fine with me, because I know that market is going to move. It will not stay where it is. And if I am deploying everything as in 2:1 ratio, like 2 times profit and 1 time loss, and the movement has happened, how I am in a bigger trap, because I don't have money to make the adjustments. Instead, I'm willing to take a higher risk thing and leave more cash free. And after the move has happened, I will make adjustments that will expand my winning probability close to 95%. For example, I create a short straddle of, say, I create a short straddle in Nifty of May month. Okay, call and put together. I have collected 800 points, and this is 22 600 strike. Okay, so put together premium collected is 800 points. So which means 23 400. I have coverage to 21 800. I have coverage. Now till here I don't have to worry anything. Suddenly 300 points moved today. Why should I be worried? I am covered till this level for next month, right? Probably I see that as an opportunity, and the risk reward is be showing like I will be standing to gain only 30,000, and the risk is like 1 lakh, like that. Fine with me. After 300 points of move on the downside or upside, I'm extending my range now. Now I got covered from 21 400 to 23 500, and now the profitability is 80,000, and the risk is, say, 1.5 lakhs. Now, should I be worried about this? I From current level, what is that I am getting? I am getting 1,000 points on the downside and 1,000 points on the upside in Nifty. Should I be really worried? Not at all. Say I didn't do this adjustment at all when the market moved, and then it is showing the first position. Market has moved to uh, market moved 300 points down or 400 points down, and is currently at 22 200, and I am in a loss of, say, 20k. Okay, loss of 20k. Now I didn't do any adjustment. market consolidated in this, and then for over the weekend, and my Monday morning loss is showing say 15k, and still I am not doing any adjustment. Monday morning it is showing 15k loss because weekend erosion, some 3,000 rupees eroded. Fine, but still I am in a loss of 15k. Should I do anything? No, I will not do anything. I will let the market to fall further. Say market has come to 22k, and now I am having a bullish view. I am expecting I am looking at the outlook. It says that it's going to come up. Then it's fantastic. Now I wanted to do a fresh adjustments. This time I am creating a range extension, and I am getting a range of 21,000 to 23,800. Okay, and my profitability is now 1 lakh, and risk is now 1.8 lakhs. Okay, now should I be worried? You got so much coverage here, so much of coverage that you got. You don't have to worry at all. Just absolutely don't have to worry at all. You know this is going to be a fantastic chances for you to make money. You don't 95% of the time it's going to be in this range. By May month end, will it break 21k? Will it break 23,800? I am just talking about two times one adjustment only. Basically, I will do 4 adjustments to 5 adjustments, and then go on expanding it. Right? So this is called money management and risk management. These sort of things you will learn with experience or by learning from somebody. Going okay. Otherwise, let's put this. So I don't know if it would make any sense, but then just copying and then pasting it over here in the group. Yeah, sure, sure, Michael. Take time, then let's see. My pleasure, Michael. Absolutely. And then never try to automate your trading, like buying some algos, signing up for some sort of recommendation groups. Telegram, lot of groups are there that says that I will give you call. You put 1 lakh, it can become 20,000 rupees consistently. Returns will come. Some more promises and all there. Don't get into those where you just have to rather invest that money into buying yourself some good books, or buy some license of certain positions, certain one moment. Hello, hello. Yeah. Okay. I'm in the meeting. Can you call me after at around 1 o'clock? Yeah. Thank you. Yeah. Thanks. All right. Data I won't get into algorithm. Sure. Yeah. Basically, we should own the learning process. The learning process should be ours. This is Bank Nifty. What happened to Nifty? Back in the box. This is the box. You see, guys. I will convert this into a triangle. Sorry, rectangle. You see, this is the box. It has again entered back. That's what a good analysis is. Hey, Sid. Oh, oh, sorry. It was like, that's nice. Uh, it'll be good when you get time to actively get into the discussions that you have a lot to share as well personally. Um, so it has gotten back into this zone. Every dip is a golden opportunity for positional calls, undoubtedly. So broke 9 EMA, 20 EMA coming to the VWAP levels and pivot is over here. Oh, this is LT1, sorry. I was wondering what is that? Yeah. Guys, are you seeing any ad in the stream or it's continuously running? Okay, only at the beginning. Yeah, I think I have changed some settings there just to keep it minimal. Minimal means as it completely stopped or it is coming, I don't know, that's why. Watching without skipping. Thank you. Good. Uh, oh, okay, I'll tell you what I did because this is not a recommendation, but what I have done, I am telling. Okay. Oh goodness. Hey, this position is what? 22 400 C. Yeah. 22 400 C. April contract. Uh, Morning it came to 177. Then there was another dip somewhere over here. Very small quantities. Very, very small quantities. 173. Another position. What is happening? Then again at 170 with a large spike. All these things are taken. Right? Now you are seeing this red candle. Average is 173.5. Okay. Currently trading at 182. So you tell me, despite this sudden fall, look at the bounce back on the call side in the month-end contracts. Watch it for the same week. You will be struggling to find break even, but month-end is comfortably giving you a profitable trade, right? So that's why I'm saying every dip is a golden opportunity. Maybe exit off entity at 185. Because if it is going to be in this range, do multiple times the same trade. Every time it falls by, every time it gives you 10 rupees, book it. That's what I would be doing. Okay, got executed. 185 it got executed. So, Michael, I think I'm seeing you for the very first time. I don't know if you are aware of this trade setup and all that. Have you joined any of the streams earlier? So we have FASP levels, 9 EMA, 20 EMA, those VWAP. People who have been following for months or years, they know my setup. If you're new, then I can walk you through that. How many of you play chess here? Anyone plays chess? Oh, you used to, did you? Okay, I see. Maybe I would like to play a game. Don't know if it would be making sense to do it over here, but yeah, let's do it. Okay, don't let you. I see. Yeah, it becomes very difficult. Okay, I will exit at 195 if it goes good. Let me place it because there will be multiple opportunities. I can re-enter. One 191.5, 192. Oh, I resigned it. Okay. Gold. $193.5. 194.5. Yeah, I think it touched once 195. Not sure if it got executed or not. Let me check. Oh, strange. It didn't go. It got executed now. So good. Booked it. So I'm talking about 22,500 CE of next week. No, sorry, in a month end contract. Just playing a game of chess with that. Uh-huh. After this, I'll be going back to that. It was pretty evident what they're trying to do. Just playing between this box and then going up. Upside opportunities. Every day you have an upside opportunity. We'll talk about it in some time. Let's just get this. Let's put this over here. God, I lost too much of time also, and the question also is losing. Hmm. Hmm. The good part is that this bishop is useless, so fine. Okay, that's fine. Okay, let's focus here. Uh, Getting rejected again, coming back. So Siddharth says that you have 23,000 and 50,000. What is that? Strikes you're talking about? Okay, you're talking about strikes, I believe. Both Nifty and Bank Nifty. Hi Siddesh, welcome. Okay, well, that's nice, Siddesh. We have been just talking about the outlook for the day and discussed why it is going to be consolidating in a tight range today. That explanation was given in the morning hour. First thing that we started off with that. So this box was established, saying that this box will be the zone in which it will keep returning time and again to trap people. So this is where people will get trapped, and then some algo moves will come. Basically, they will be closing towards the top of it because that is where 22,500 is about. So for this week, they are creating positions of 22,500 strike. Straddles might be created. Um, but for the trap to happen, there are certain ways to do it. Inflating the prices on both the sides and taking directional positions and then converting into a short straddle. So you will see that clearly happening. And it's going to be a buy on dips positional market. Positionally, it is buy on dips. Yeah. Here is what I would suggest. Add 22,500 call option May month. Say, assume that you have bought 5 lots, okay, in your virtual trade. Put it in your virtual trade. See what kind of returns it gives. Wait for 2 weeks. Keep a track of it. See what sort of return it gives. And do the averaging. You are allowed to do 5 virtual averaging. And when you want to do it, whenever you see there is a more than 15% drop, do an average. Like say you got it at 200, it has become 175, buy. You have got it and then it has gone to 150, buy. So 3 to 4 averages you do it and then see the results after 2 3 weeks. Oh, ads are coming so often, is it? Third ad you got it. Thanks, Sid. Really appreciate. Something like the settings was automatically it will aggressively populate like that it was. I changed it to frequency of 18 minutes or 24 minutes. Every 24 minutes or something like that, you will see an ad. Something like that. Because aggressive means they are saying, sir, so many ads are coming like that. So, numerology ad. Funny. See, just for your information, what is happening is markets slowly, gradually going up, right? It's not like in a hurry to fill this gap. It will use all its time to go and fill the day gradually. One second, my baby is here. Hi. Come on. Wow. Wow. Hmm. It is. Hmm. All right. Um, she wanted song. Okay, wait. Here. Okay. Yeah. Thanks, Divya. Yeah, I really enjoy your company. Only thing is on Wednesdays and Fridays, sorry, Wednesdays and Thursdays, when the market is having expiry date, that's when she will come and sit in the lab. There are many instances where I was in profit and wanted to book the profit, but she took the mouse away and it went into loss also. So you can't even say anything to her, but I really enjoy her company. But just that, on expiry days, I don't want her to be so much around me. So this is the zone. I keep saying algos will be in reference to this zone. So this is one trick I will tell you. Algos, if at all anything is there, it will be in reference to this box. What do I mean by that? If the market has gone up, an algo will come to bring it to this box. If the market has gone down, algos will bring it to this box. Getting it? Basically, you can predict an algo to a good degree with some reasoning. Yeah, the boxes for many days. I don't know about that, but this window, yes, for 450 is there for many days. That's right. But I drew this based on the high and the low basis which this was drawn. Like if you look at the body, this is the box. The first candle and the base. It was trying to hold it within this for almost 1 hour 15 minutes, right? Then here it broke, but then you see it coming down. So this is I think it's like first 15 minutes, half an hour basis which this was drawn. But the logic was extended back saying that there is a trend and today it's going to be a range bound. And where the range will be, this is the range. See, this one I sold at 195. Should I, now it is trading at 188. Should I take a position? Just answer that. Think and tell me. I told my average was 173. I booked one at 185 and another at 195. Exited all the positions. Now it is at 180, 190. Should I take? Because it has come to the box, right? Should I take? These questions you answer sincerely, because don't say that okay, Satish only is going to take, right? What is there in it for me? Should I? How does it matter? It's an hypothetical question. No, this is the real question, because you see a spike down. This spike I took a position, but this one I did not enter. Uh, what if it rolls back and then goes up? So Nihar says that wait for it to come to the middle and then take it. The thing is, now my target is done. As far as buying is concerned, the target is done. First opening morning entry was 177, then 173, then 170. Roughly, I am putting it. Average was 173.5. Then exited off at 185. Another off at 195. Closed all. Now I don't really care whether the market is going to rally or not. I don't care, because I'm happy with what was made. Now if at all I have to buy, my entry should be as close to 170. The last averaging that I did, that is the price at which I wanted to buy, or below that. Not even 173, 177. It doesn't matter whether it has come back to this zone or not. I will only enter when I am getting at a price of my third average, otherwise I'm not going to do, because my target is done. Suppose my target was not done, let's say. My target was not done. And then it has come here. Then, of course, I don't want to buy at 180, but at least where did I sell? I sold at 185, right? I wanted to at least buy lesser than this price. Say 183, I am getting it. It's okay. I can still take that chance. But I don't want to do any buying uh, above my first exit or below my above my first entry. This above this first entry I don't want to do. Above 177 I don't want to buy if I have made my target for the day. If I have made my target for the day, then I don't want to buy anything below 170. But some risk I want to take and then trade, then 177 to 185 would be the range. I will enter small quantity. That's all. No, we are talking about 22,500 C. April. What contract is? April 10th. April 10th contract. Sorry. Oh my God. 22,400 C. Sorry. 22,400 C. Thing is, one, two, three only. One, two, three, four, five, 7. So 11 questions are open and it's confusing. Uh, I will put a filter and so close the position. Yeah. Yeah, it is April 10th, 24, 2022, 400 C. Yeah, it's going to be tight range. Sid. Now, this is what instilling fear is because last 10 days, so much action, like extraordinary moves continuously, either upside, downside continuously. Now, you have taken a position here and then it's not in a profit, not in a big loss. You don't know whether to hold or exit, but suddenly you will see that it is getting into a loss because here you would have taken some deployment, here you would have done some deployment, here you would have done some deployment. Almost at least 50% of the capital people would have deployed. Now, last 10 days, so much action. Today, why there is no action? That itself is a big shock. And they will also be assessing, oh my god, weekend is coming, should I exit or hold? They will make huge blunders when algo comes in. Either they will book big loss or maintain a hopeful trade for Monday, expecting a big breakout. Unfortunately, Monday also they will be in the same box, and Tuesday also they will be in the same box if it is not breaking. And then when you feel that okay, I cannot take this loss any further, and you exit, after you exit 1 hour later, it will take direction. So that's how they trap. Instead of keeping this yellow, we can make this into a red box because this is a danger, danger zone for the day. Hi. Okay. Come. Hey, Vijay. Welcome. We say tata. Tata. Bye bye. Hey, bye. Okay. She wants songs she wanted. She's asking part to part. Say hi. Hi. See, I'll show you here. See this, see this. Sit here, you will come there. See there? See there? Rumi. Hi. Ha, ha. Okay. Say hi. She's too busy watching some shots on her phone. She'll become a YouTuber. Maybe sometime. You want to become a YouTuber? Hmm? God. So, Vijay, have you done any trades? I know you were a bit skeptical about Friday trades. Are you doing it or taking a break? Oh, 22,500C. Okay. Which expiry? Took a morning trade to see. Yeah, yeah. Definitely, if you guys have made money, rest assured you will lose it in the second half. So just close the terminal. Why I say with so much confidence is that Sensex expiry, algos are a tremendous possibility. Second, even if there are no algos, second half erosion will consume at least 10 to 15 percentage on both the calls and the puts. About 10 to 15 percentage erosion will be there. So don't even think of holding positions or playing the second half. Uh, in profit, just see the market on Monday. That's all. Don't even look where it is trading. Something very fancy and lucrative price you will see. You will think that this is great opportunity. Let me enter one trade. Let me do one average. Get into the spiral. You will lose entirely. Yeah, that's right. So if you want to really enjoy your weekend, stop the trades. It's past 12 now. Eh, Unexpected moves can come, but what I am anticipating is I'm just see do not I'm telling you to not trade at all, but just for the analysis purpose, what I am expecting is let's draw some candles. Okay. Um, This should come between, yeah, between 130 to 145, expecting this to go and fill like this. Then let's just, not even able to operate my mouse. She's sitting on my hand and it's impossible to. Then expecting the next 15 minutes to come down with an algo. Let's see if that happens. So what they will establish is they have filled the gap, but then they are back into this zone. This is what I'm anticipating. If the writers are still wanting to puncture, this is what, if why I am saying is, I how do I say this? It's very simple. I assume I'm a very rich guy and I can trap people in the market. That much money I have. Now, what is that I would like to do? I want, if that is the kind of money that I have, then what will I do? I want people, I wanted to create a short straddle at 22,500. Very basic, because it's a round strike. I don't want it to be like 550, 650. I don't want to straddles around that. I wanted it at 22,500. So if 22,500, then what is the gap from yesterday? This gap is there. So what would be the best way to keep an algo? The best way to keep an algo is to, I wanted it here, but I want the premium to be spiked up. So let it go here. At this price, the CE will be at its peak. Write the position. Write extensively. I will probably something trading at 190 rupees right now. I will get it somewhere around 260, 270, 260, 200 rupees. Sorry, 250 rupees, 260 rupees. I will get it. So 260 rupees I write, and then the price immediately drops, and then same 22,500 put is now on the rise. Probably it will even drag to such an extent in the second half that they may go till here, and then bring another green candle. Let's just duplicate it. This is what I would do if I have infinite money, let's say. Okay, if I have infinite money and then I wanted to set up a trap, how would I like to set the trap? Yeah, something like this. So I would like to go up, fill the gap, then drag so fast, breaking this, then everybody will think that it is going to go down, and then bring it back here and close. So here I did the call writing, here I did the put writing. I don't need any edge. Getting it? Hi, hi, Money, Murali. Yeah. What's your view on Sensex for the second half of the day? Sensex. Boy, where is Sensex? What is the code for Sensex in TradingView? And then when this sort of things happen, our group will be fully active. Oh my God, they have given a breakout, and then incredible fall, and then with this move, there will be comments of crazy market, but it's nothing crazy. This is this is something you can see it coming. Okay, SNB BSE Sensex. Okay, SNB BSE Sensex. Otherwise, let me type Sensex. Oh, this one. No good support. Trading above pivot. Breakout. Gap is still there. 74 300 can be expected. 300 to 350 can be easily expected. Okay, it will be lag. I see. Not sure about that. Anyway, I don't do Sensex, but there is a possibility. Why I am saying that it is a possibility is so many factors are supportive. 200 EMA, 200 SMA, pivot is trading above the pivot, trading above 9 EMA, 20 EMA. It's trading everything above. So what is the thing that's pending? Not so difficult to think. Yesterday there was a gap, and that gap, an attempt was made. It got rejected at this momentum candle. You see this, it got rejected at this momentum candle from yesterday. Now it will consolidate and gradually go up and try to fill that gap. So that much is very logical to interpret. Can it fall from here or deep dive? It can. In, I am not into this, but then you watch out for this level and this level. These two are very important levels. Okay. Um, from here, the reversal should happen. If it falls, it should take a support and then get back. If it is not finding support and then still comes down, it should ideally find a support over here. So expiry day, everything can be crazy. What they can also do is bring it so much beyond anybody's expectations and then drag it down till S1 or this levels they can drag. And next day, immediate Monday opening itself, they will give you a expiry day trade. If you take, it's going to be very difficult. But yeah, you can try. Yeah, it's a good volatility index. The 10 volume, 10 lots, sorry, 10 quantities, I believe, per lot. Meow. But positionally, we are bullish. Murali, that should be kept in mind. When Nifty hits 23K, Bank Nifty will hit 49K, Sensex will hit 75K. All will work in sync. So we just need to take the nearest round number and the new high that it has to make 75K. It has not done in the past, so go and do that. 23K Nifty will do. Bank Nifty 49K. Okay, so it's not that your regular trade, just today you're taking some advantage. All right, let's go to Nifty. Monkey. Oh yes, monkey. Monkey. Hmm. Okay. So in April month you lost some money in pancakes. Thing is, my learning, I'm just sharing. when you are in a journey, keep. No, no. Okay, just a moment. I will. She wants song. I will put it in TV and come back. Just give me 5 minutes. I need to drink water also. Come on, come on. All right, guys. Yeah, most welcome. Another possibility is that now you're seeing this market here. What sort of another algo that is possible is let's just copy this. How do I copy multiple things? Okay, anyway, one by one I can go. Another possibility is that this can be a red and then followed by the green and followed by a red. This is another possibility. So two algos likely, right? One, this is the color I need to change. Let me change. Okay, not a problem. So this is how one can be prepared for algos. Right? Logically, what other trap can be kept? Only these are the two scenarios I can think of. Right? So these are the two possibilities probably coming down into this zone. So like this, they will manage the algo. And what will be a perfect algo would be the second possibility. This one would be a very good possibility because if it breaks first, then everybody will think that okay, the gap down and then the consolidated and then it is going down. And then the moment everybody is anticipating it to go down and then enter aggressively on the put side, they will give a crazy move like this, and then every somewhere it will just open up somewhere and quickly go till this level. And maybe before even you realize I should enter into the call side, it would be reaching here. Then you enter here and then hold some positions, then they come down. So it's a perfect trap. If they wanted to trap them mercilessly, the second one is a good possibility. Reasonable trap would be this first one. This is an extreme trap. This is an extreme trap. This will shock off people. This one is fine, predictable. Murali, I didn't say. I mean, let me just reply. Yeah. I don't know why it's so confusing. Let's. Probably, I think you're on stream as well. So, God doesn't allow. Hmm. What I am saying is, um, let me just draw and show you. Now, what is that you are holding? Two lots. At what price? Yeah, 47,700. Just it's a free account. I am not in a position to share my sensible. That is on another tab. I will not be able to share that. See, right now this is trading at this one is trading at 48,200. Let's say 48,200. Okay, let me take this. Yeah. Is there any text box or something like that? Okay, I will write it here. Now two lots, 47,900 CE. Clear all. Let me delete all, and probably I can go to this and then explain. So 47,900 CE at 309 rupees you are holding. Then currently it is at 490. Now you have booked, correct? How? What is your fear? What are you afraid of? This price may come down, correct? That is our fear. But what if it goes up? I will make more money. That is also another consideration. So don't have to worry now. Simply what you are doing is, what is the price of? Let me just open. Which week expiry it is? What is the current week only? I think, right? 40. Yeah, 47,900 current week. I think April 9th. Okay, 9th expiry. Now, what is trading at 150, close to 150 rupees? 48,600. Now, 48,600 is how many points away? It is about 400 points away, correct? Now, 400 points away, you are getting this 48,600 at 150 rupees. Now, what I am saying is sell this two lots. Now, what happens if the market comes down? You don't have to worry. You don't have to. You are selling these two lots. You don't have to worry. Reason is you are covered for 150 rupees, which means if 150 you are reducing, it will become 340 rupees. This one from 490 will become 340. Correct? So even at 340 you are in profit. It's not that you are in loss. You are still in profit even if it comes to 340. Supposedly the market continues to go up. This is an ITM strike. This will jump for per rupee, 1 rupee it will jump. So like 100 points move, you will get 80 rupees added. Like that it will jump. So by the time it reaches 48,600, probably 48,600 will become 300. But this will be crossing 900 rupees. So that way you stand to gain more. And you don't do anything, you leave it overnight. Market opens on the same level on Monday. Let's say it is opening flat, absolutely flat. Probably this would have become 450 rupees, but this would have become 90 rupees or something. So in any case, you will be making money. Getting it? And then after this becomes like less than 50 rupees, let's say you are holding it till the expiry, this becomes 50 rupees, close this leg, take something that is trading about like around 120 rupees, write it, again collect the premium, again write something around 80 rupees, I mean 120 rupees. Do it on the day of expiry. You can probably take a call whether you want to keep it or not. So use these two lots in the profitable leg to generate more profits from writing link. Getting the point? Yeah. The beauty of this is you can still continue to play directional. How? Let's say algo moves have come. You have taken two lots of writing. Suddenly there is a fall. Now what will happen? This would have gone to 340 rupees. This would have gone to say 60 rupees. Book this at 60 rupees, buy two more lots. You are expecting a reversal at this trend, maximize it. So both the directions you can play. If you are holding only call option, then what is the only way to maximize? It has to go up without any theta decay. It should be trending. So you are very much limited. But if you have two lots of writing, you can do many things. Yeah, sure. I think been there in that position many times. So the thing is that see, saying is very easy, but when you see a move, no, you'll forget everything. Your plan will disappear from your mind. The maturity is when you still have the plan. If the market is acting crazy, we shouldn't go crazy. That's the trick. You should know what you're doing. Okay, this fall is expected. Till where I am expecting the fall? Till this level. Okay, let it come. I will book my call option. Then what? I look at my buy position. Probably it has come to 309. No loss, no gain. Is it hurting? No, not really. I booked 8 lots profit. Another two legs, I closed it at very cheaper price. 150 I sold. I got it at 60 rupees. 90 rupees profit I made. So that is cool. I am closing that. Now here you are waiting to see whether the market, how the market is reacting. Maybe if I trust my system, I would add two more lots, and if it is just pulling back till here also, I'll exit two lots, and then towards the end of the day, write another thing at 150 rupees, close the day. Now what happened? You have booked 690 rupees. You have taken a fresh two lots, booked it at 400, another 90 rupees you gained, and then You have also covered another 150 rupees. Maybe that strike must be 48 400 or something like that. It won't be 48 600 at that time. It will be 48 400. Fine. I am just looking at the price and the protection, not strikes. Strikes is immaterial. Okay. See, what will not happen is if there is an infinite move on the upside, will you lose money? No, because you are having an ITM strike 700 points away. This is 47 900. That is 48 600. Beyond a point, it will become 1 rupee equal to 1 rupee, like that, both the strikes. So your profit will be capped after a certain point. You will not lose money 1 rupee also. What is the worst case scenario? Worst case scenario, market can fall infinitely. Then what you are doing is, say that the Monday gap down here from 490, it is opening at 150 rupees. This will be at 10 rupees. Nothing to worry. Just close the 10 rupees, write another strike above 47 900. Not of the current week, because the current week itself is 150 rupees only. What your buy price is at 150. What is trading right now at 490 has become 190. Now, if I do if, at that time I cannot go and take something at 150, because that will be a strike below my original position that I don't want. So what I will do is go and write next week expiry above, like 48,200 CE, 17th, 16th expiry. Write that, manage it. That's how you convert. That's called rollover. So it is always, your position is not with respect to the loss or profit. Your position is respect to your view. Let it fall, but how long I am expecting it to fall? How far can it go? And then where am I expecting a reversal? Where am I finding a support and resistance? That is going to determine what you are going to do in order to manage the position that is in loss. Okay. Yeah, sure. You will make some mistakes. That's okay. Probably aftermath, you will be thinking, if I, instead of doing this, I should, if I had done that, I could have got better results. That and all is only theoretical. Anybody can do that after market closes. What you can do when the market is live is what you are capable of doing. So Bank Nifty is looking promising to go on the downside to test VWAP levels. Uh, why still it is indecisive? Because the confluence has not happened. 20 EMA and 9 EMA have not come and met yet. If it comes and meets and then it trades below, very high probability for an algo to go and hit this first. One single candle spike, then next candle up. Very good possibility. Yeah, yeah. Of course, there is no learning can happen without paying a fee. Yeah, I think another 9 minutes left. No, for 1 o'clock. I'll play a game just to, because I don't see any action coming in this time. 9 minutes left. Until then, I will at least enjoy a game. Oh, he's a national master, the titled player. Oh god, I wanted to take you to this, got distracted. Okay. This is enough for him to win. Will there be moves after 1 p.m.? Ha, don't know. We are still considering a possibility. How feasible it is, let's check that out. I mean, algos, it all depends on what Sensex is trying to do. Sensex is going to be the primary decider. Go here, hit him. Oh god. A lot of mistakes in this game. Oh god. Check. Managed really well. Only thing is I am running short of time. Did very really well. This is a good game. Unfortunately, my attention is divided, keeping up the time. Well, this is a draw, but unfortunate I have to lose by time. I cannot lose this game for sure. Oh god, this is draw. Unfortunate I lost, but it's okay. Okay, let's check. Will there be a move after 1 p.m.? I would really love if it comes down here. I will accumulate some calls at the cheapest price possible. Very high chances, Maithili. Yes, you're right. Nifty is showing some momentum. If they do this one, they are really in for a big kill. One minute to go. 6 seconds, sorry. Okay, fresh candle started. Oh, Bank Nifty is giving some clue. See this? It's trading well below both these EMAs, and 9 EMA is coming down. Moment it touches this 20, we should see a strong action on one side. Wow, look at this, guys. Both the indexes are moving at good speed. Look at this, it has come to this box, and the strike that I was talking about 22,400 call April 10 is still at 186 rupees. We exited somewhere over here, and after 1 hour it is coming down, and no decay. That's the power of call side premium hold. They are holding it like anything. Would it break VWAP? Excellent. It's going down. So I don't know if you guys heard, because I took a break, came back and explained this. I don't know how many of you were there. I said this is the most promising way to kill the buyers. So this is the best way to attack the retailers. And this shows no mercy at all. But this one is going to be like little soft on the retailers and still doing the algo. But this is going to be the deadliest one, and looks like that's what is going to happen. And Murli, I don't know if you have taken that writing or doing that paper trade. That 150 rupees would be protecting. C premiums not going at all. Here it was 186. Here it is 185. It has come down only 1 rupee for this move. From here to here, it has only moved 1 rupee down. Not going down. Now this can be a momentum candle turning fast red. It can become like this. Speed of this will be super fast. If at all it's going down, speed of it is going to be super fast. Oh, you see this? It's happening in Bank Nifty. Look at the wick, large wick, and then it's trading below. Nifty is not giving that sort of clarity. But here you can see the speed of this will be super fast. Now it is at 182, 183. One 179, 180. Yeah. Here you see the speed. Wow. Look at this. Bank Nifty is going. And Nifty is still holding at 180 rupees. Not going down. Oh, Murli has not taken the position. So that's the risk. If we, maybe it was trading at 140 rupees, we thought let it become 150, I will buy. It was 10 rupees, 5 rupees that we wait can be really hurting. So we should not see for those 5, 10 rupees. Particularly In a writing position, you don't have to see that at all. Crazy. And you know what is the price? 184. No erosion. Just like futures. I don't know if anyone got any entry because I, I don't know if you are there from the morning. I said I will enter only when I am getting it at a price less than 177. So I did not enter. But there are some risk takers who would have entered when it entered into this box itself, wondering if there are any. Oh, Nihar, okay, good decision, Nihar, good one. Oh, shorted few, best thing. Two things are very certain. One, buying a call and writing a put. Writing a put requires more margin, extremely like maybe you buy two lots of call, you would have spent hardly some 20,000, 25,000, whatever, in month end contracts also. But put, if you have to write two lots, you need about say 2 lakhs. So, uh, but this 2 lakhs is worth it. And because this 2 lakhs certainly can give without stress big returns as compared to buying a call and then waiting for those 25 points. Now market need not go down or up. Even if it stays here, puts will give you money. But calls may not increase it, but it may continue to hold the profit. That's basically the difference. While you pay 10 times more premium margin money, without doing anything, the profitability keeps rising. But when you do buying, it has to move. Otherwise, there is no increase of profit. Okay, you have taken. Yeah, yeah. I know you should have taken some OTM for edging purpose. Just simply saying that you just purely from the investment point of view, but, margin management, yeah, probably would have taken something trading at 2 rupees, 5 rupees, something like that. That is to limit the loss in case of black swan. Wow. The beauty about writing a put is, I'm sure even if it is coming down over here, you will be still in profit. You will still be in profit because this is a spike. You got this position in a spike. Probably the true value of it is 200 rupees, but you would have got it at 220. Now, even if it comes down here, it will not be 220, it will be only 217, 216, like that. So, for it to cross 220, it has to make a new low. So, that way you are covered. Yeah, could be. This could be algos, but not enough. The candle lengths are not enough to be called an algo. Algo should clearly take down, and the length should be something like this. You know, it should be like clearly stunning to see. That is an algo. These are some sort of small traps, not at all. Not really so big. Algo players have not entered yet. Not a day for yes. It is, Desh. It is definitely, but only if you are playing positionally. It is. Or next week expiry also is okay. Maybe you have plans of buying 10 lots. Definitely, 2 lots over here is a good money investment because this box was very critical. Uh, Definitely, this box here can be invested. Uh, at least 2 lots. If you see a sudden spike on the downside, just go ahead and take more adding of more positions. Probably you can consider some stop losses if at all you wanted, but I don't think you need a stop loss. You can comfortably ride on it if you're playing very far off things. No stop loss, just hold. It will be good to exit above the box at least half the quantities. Say that you are doing something here and the market come down here, you do on average. Again it went here, you do another average. And then as it enters into this box, exit the last trade. And here you would have, here you would have taken one average, right? That one you exit at the top of the box. And as it crosses the box, you can exit finally if you want. Many things that you can do. My God, it is at 179. If it is 170, 175 below, also I will think of re-entering. 179, I don't want. My morning average is 173.5. Why should I buy above my average for the day? I don't want that. You make it so attractive for me to re-enter. Otherwise, no entry. ~ 178, 179. Yeah, obviously, guys, this is all an attempt to set up the trap. More that people now think of it. No, you are seeing this fog. What will you see? There is a gap down, and then the market tried to go up. Now it has peaked and then coming down. Somebody who has done some sort of candlestick pattern study course and all, they will be seeing that, oh my god, this is a great opportunity. We should be going on the downside. Everybody will be dumping their money on the downside, right? Puts they will buy, and they will be thinking, should I enter into the puts? And then suddenly you will see the market over here. They will be not seeing the price enter at market, inflated price they will buy. 1 second it will show you in profit, probably some 2000, 3000. You will see profit. Next second it will be like so showing 1500 rupees, then zero, then negative. Then you will do some average. Again it will show loss of 2000. Again you will do average, and then there will be an algo back. Trapped at the peak price. That's what will happen. It's a good difference from used to be attractive. Yeah, correct. So it's not about the view. If you see the entries, it's not about the view. Never about the view. Just anybody can form a view. That view is important. Without a view, you cannot trade as a buyer. You need that view. But is the view alone sufficient? It has entered into the box, but it is above my average. Why should I do that? And you have done a good job in booking the profits without stress in the morning. Now, knowing that second half is a loss making time window, I should not be even trading. But if I have to really come into the trading, then offer me something that is lucrative for me to enter. Otherwise, no. Sudesh has seen same pattern. Everybody see, and I say it's not like I am thinking from retailer's perspective. I am just recalling what has happened in my account, right? How I lost money. That experience only I am sharing. So, and I know for a fact that it is the same experience. As long as you are in buyer, the difference won't be much. It is the same story. Hmm. Have you tried futures? No. Futures, I read somewhere, I think it was P.R. Sundar or somebody. Futures have no future, options have too many options. Uh, you go into futures, the thing is, if have you tried? Yes, I've tried. I've tried, not knowing the challenges. One is, oh, sorry, why is this coming? One is that, okay, no erosion is perfect, but problem is huge transaction charges. Then other main challenge is that to edge this. See, edge what you are going to do. Let's say that you have bought a futures. You are limited options for edging here. You can write call or buy put. What other edges can you do? You have taken a futures buy, expecting market to go up. Let's say now if probability is that market may stay in the range or it might come down. Now, what are my options? I have to protect my downside move. So I have to either buy double quantity or triple quantity of puts. Correct? Oh god, look at that algo, guys. On Bank Nifty, I think it is algo happening. Okay. Perfect. Look at the time window. It is exactly in sync with where you have placed this imaginary candles. It's exactly going. Yeah, STT is high. So these are the challenges. My I don't want an instrument that that gives me fewest options to edge, because when you have very few options to edge, it can be easily manipulated, right? It can be easily manipulated. For instance, what they can do is they will go up super fast. Say I have bought puts. Let's say that I have taken a future one lot and PE say 2 or 3 lots. Okay. Now what happens? Future market, like this candle is coming over here. It has gone up, but I am losing more money here on the call side. So my break even would be somewhere, if the market moves only around 200 points or 300 points, I will be getting into breakout profitable zone. Now what they will do is they will go 100 points, ensure that I lose money, and then they will bring this one down to where it is. Both my positions will be in loss. All right. So it is very uh, unreasonable thing. That's why I don't do futures. One 130 also happened. So what you are doing, that futures, what you are doing is you're paying too much of premium, margin money, everything you are spending. Almost close to 1.5 lakhs to 2 lakhs, you will have to create a position to have a break even after 200 points of move. Why do I need that? Instead, enter at the lowest point, invest 20,000 rupees only. This is giving a good profit. If at all you have to club futures, I would rather go for a weekly expiry buying position itself. Yeah, yeah. I mean, see, now we have to spread into many things. No, if you have maybe HDFC, SBI, you will have to club it with something and then find edges can be created. My core is Bank Nifty and Nifty. I don't want to focus on anything else. I don't want to focus on anything else at all. Now, entering into futures, then I have to extend my legs into stock options. And stock options, one time you get big money, then it will make you, okay, I'm getting better returns than here. I will have to go there. There I will lose big. Then it will affect my Bank Nifty and Nifty, confidence. It's a cyclic web. What you have acquired over the years, when you experiment with some new instrument, you will lose all the discipline acquired over the years, just like that. Rather, I'm not saying one should not do it. I am of the view, once you have taken sufficiently all the losses from the market, then you have created a good money to trade, and that money is entirely something earned from the market, then go on to experiment. You lose that entirely also, no problem, because you have pulled out your money from the market. At least you will be happy with that way. So the main thing is, one of my key learning is, those who are into instruments too many instruments are the ones who are in loss. take any big players, they will be in very limited portfolio because what works for them, they will stick to that. Yeah, correct. See, it's like this, no, like Ambani or some Tata. Tata doesn't. Tata has money. They can be into furniture business, let's say. But why they are not entering into furniture business? They can also build some sort of what to say ISRO projects they can enter into, or like SpaceX, they can create something. Not that they don't have money. Why they are not entering in? Simply because they know their core competency. They are sticking with their core competency. Once they have become the biggest brand, then they go on to expand into other areas. Like Elon Musk, he did not enter in Facebook. Mark Zuckerberg is not into like 10 different business. Started with that, sticking with that. Probably he will see some closely associated business. He will extend it after some 15 years, 20 years, right? It will not be okay. 1 crore I put, now it has become 5 crores. Let me deploy 1 crore in another business. Let's see that. No, they will not do that at all. Similarly, this is also a business. Here, mature, achieve your, pull out your losses from the market, pull out your capital from the market, let the profitability be the primary source of capital in your market, in your account, and with that account giving you consistently good returns, you take that money and say that you have acquired about 25 lakhs, 30 lakhs in from the profits after pulling out everything, and then you are able to generate some, say, about 2 lakhs, 2 lakhs. Now you have additional 10 lakhs generated. That money you want to will bring in, and then want to experiment. Very well and good. Crude, gold, this one, Nifty, Bank Nifty, Bank X, Sensex. If you get into everything, we are destined to uh, disaster. Yeah, correct. Correct, mate. Yeah, correct. Hey, no, Vijay. What I am planning to do is I am just waiting for the algos to happen. If the algos are happening, then I will wait. If it is not happening, then I will end the stream. No? Because ultimately there is nothing you can expect. What will happen maximum is I don't see it crossing this level. Okay, this blue line, it will go up, but it will not. Okay, let's give. This is a very tight range I am giving. I am saying it will not break this level. Okay, peak of it. This is the ultimate max I am expecting it to go, and from there a sharp downside move will come. Downside again, this is the range. Let's include the wick also and drag it down. This is the range. So these are the points of reversal I am anticipating. With that word, what to be done? Like, I don't know. We know with the next 90 minutes, it's going to go either of these extremes, but then come and close in this box. That's what I'm expecting, right? And it's a writing question. Simply, I cannot do anything. I'm. It's simply boring. Not to. If I'm a buyer, I'm writing on this. It's fine, but I'm not even buying. Blue line from me, so it's an alcohol. Come on, Vijay. Hey, hi, Leo. I just missed your message. I'm doing okay. Thanks, Leo. How are you? more than Nifty. Bank Nifty is in a rush. Okay, so some observations here. This is the beauty. Now, when the market came here, it was holding 185 ranges. Right, that strike I'm talking about is 22,400. Now it is going up. It should be crossing 195, right? But it is at 185. You see what is happening? The crunching is going on. Premium crunching is going on. Frustration is being built. Oh my god. The more it is not moving, I'm getting stressed. Although I'm not taking any position, I am sensing a huge blast because everybody is anticipating some sort of breakout not happening. Going if this candle turns red and comes down again, if it consolidates, I don't want to see the market. Really, I don't want to see the market. If at a 215 and all market is in the same range, I don't want to see. I will see only after 3 o'clock. Because I'm sensing some sort of absolute nonsensical moves. Why it is going up, why it is coming down, nobody will be able to explain. Those sort of candles will come. Oh, good, Leo. Happy to see that you are back. It's been a long, long time, and all the names are so familiar. I think we have an association now for more than a year now. We know each other. So green bar, green candles, red bar, red candle. Okay, fantastic. See, this cases for the algos. Another frustrating point is they can just keep this level here itself, and then I'll show you a place where market has done that. Uh, Today is what, 5th, right? And last week Friday was holiday, I think. Let's go to 22nd March. And then I, not, not, okay. Yeah, this is what I am talking about. You see this first candle? This is the first candle. And through the day, it did not break the high, it did not break the low, and closed here. You see, it could be this sort of day. If algos are not playing out, then it will be this sort of day. I don't see a trend. I don't see a trend happening. That much I'm feeling comfortable about this. Oh God, my baby has come again. Let me go pull her. Hello, come, come on. Uh, wow. No, leave this. Come on. Hmm. Hmm. 1 second. Yeah. Yeah. No. Phone. Yeah. All right. Coming down fast. Yeah. Oh. Yeah. So good, good, Nihar. It's fine. You book the profits. That's good. Stay away. Uh, it will only add you. Hardly you will be able to add 100 rupees, 200 rupees extra. That's all to what you have earned. But the chances of losing the entire profit is super high because from now on you cannot predict what can happen. Only person who can make money here is writer. After 1 o'clock, who can make money is just writer on a Friday. Yeah, most welcome, Divya. That's pretty cool. Um, hey, look at this. It's going down. Anyway, but enjoy your weekend and have fun. Don't bother even if there is any sort of moves. Ultimately, you can think of adding some sort of positional calls later. But I would suggest just sign off. Take it on Monday. What does in green and red indicate on the chart? So I was saying around 130, I am expecting this sort of algo moves because market is consolidating, right? I am suddenly there will be a blast on the upside and then huge fall and then retracing, closing at this box. This is one pattern, or it can go down first and then come up crazily high and then again come down and close near this box. So this is the pattern I was anticipating if at all there is an algo. If there is no algo, then 23rd March you can go and check that how from start to end that one first candle, within first candle itself the entire day was there. It will be a day like that. Just telling you what are the possibilities, that's all. My god, what are they doing? Look at this big red candle. I think algos are acting upon. uh, yeah, I think they have already done that inflation when the market gave a gap, right? Like not here. When they gave this gap, that itself is the inflation. Because puts otherwise to go down step by step and then to inflate is not very difficult. Unless you see a trending down quickly, three successive candles taking red, then the values will appreciate. Otherwise, puts will not appreciate much. This gap itself was the spike created. Having said that, they are trying to, uh, they may try to take it one more time. Yeah, see this, it's almost the same pattern, right? The same level. This is the stress. Somebody is somebody knows that they are getting trapped and unable to decide. This is exactly where seeing this large red, they would have entered into the put. Now seeing this, they are unable to decide whether to exit or wait or to do average. So, and what can happen is they may break this and then go high in one single moment, and then you will enter into the call side. Again, there will be a red. So it will be red, green, followed by red. Same structure like this or this. Yeah, some got butchered correct. No, no, no. Yes. So when the premiums are low by the edges, market has come down, right? What I use this time is I will not be thinking about whether to write some positions or buy positions. I know the edges are very cheaper. Yesterday, something was at something I took it at say 2 rupees. Let me just write it here. What I do is something was at 2 rupees yesterday. Currently, it is at 1.25, and 300 points, three strikes below is at 2 rupees now. So I will just buy this edge, close this edge, so that margin gets released. Right? This is what I will be doing. So hardly how much I lost in this. Hardly how much I lost in this. 75 paise. But margin will be released like 60,000, 70,000 rupees. That's the beauty. Yeah. So there is, this is for buyers, this is Diwali, right? This is Diwali. For writers, this is Diwali. That's all. This will be the most dangerous one. Seriously, this will be the most dangerous one. This is okay. This sort of trap is okay. But I got to clear this all. Okay, I think we will end the stream in another 5 or 10 minutes. But I will wait to see if there are any comments, questions, anything to be asked or shared. Please do feel free. One thing I do is I avoid watching Friday second half. I really avoid. No, not because of volatility. In other days, um, there is certain price action. So I have, over the years, there are certain things that you have learned. For example, say that I got something at 108 rupees. I know when I will do the next average, the price will be at 88 rupees. Don't ask me why. I don't know. There are certain things that I have learned. Apart from the chart, apart from certain things, there are certain price in my mind. Those things and all is there. And when you do a trading or watch this, that gets affected. It will affect your judgment. So 4 out of 5 times it acts so unreasonably on Fridays. When you see that, you will not be able to trust on other days those moves when they are happening. How you are not, if you are doing multiple indexes, you will not make money. Similarly, on Thursday, Friday afternoon, if you see, it affects your ability to judge. So I don't watch market. Instead, I open Telegram and then see the chat going on between the members, saying that crazy moves, crazy moves. I know something is happening, but I don't watch. Yeah, correct, correct. Thanks. Yeah, thanks. Yeah, yeah, Sudesh. So this is going on now. You see, can you trust this? For example, if I am saying seeing a breakout like this, I will check the CE price. If it is say at 108 rupees, I will enter in. I would have entered in, right? Now, for this move, let's take a strike and see that price. To give you a realistic example, let's say 22,550 is at 100 rupees now, correct? Let's say I have entered it live. I am talking about, okay, live. Nobody is going to take any trade. This is only for learning purpose. I'm not taking a trade. I'm just saying 22,500 call, current week expiry is at 100 rupees. I have entered. It's climbing up. It's climbing up, but price is going down. 100.4, 100.8 I entered. It is now 99. Now this is the problem, right? Now let's say the price has gone to 90. I will not buy, but at 88 I will buy. But to my surprise, what will happen is it will go to 80 rupees. Now, on the other days, 88 is working, but today is not working. So Monday, when same thing happens, uh, I will not have the confidence to do that. That's the reason I avoid watching. You can take this live example. I said, right, 22,550 call. I entered at 100.8. I'm going to do an average at 88, let's say. Because when I do an average at 88, what happens is it immediately comes back to 97, 98. I exit there. And my position will already be in profit. And if the rally continues up, no, oh, wait, Rumi. Yeah. Oh, wait, here. Leave this. Okay, yeah. Now, see this. This is the Nifty. It is just staying here, but already 98, 99. So my buy price also is not holding currently on the call side. Correct. So yes, something you would have created positionally for the month end, and then suddenly you are seeing some extraordinary volatility. You don't have funds. You exit the long-term positions to free up the cash for this one, uh, and divers one invest that freed up money into this. So typical, right? All these things are very typical. Tell it. Rumi, just okay. Yeah, most welcome. So ideally, this is continuing, right? It has come to 100.101 now. Can I book it? 100.8 I entered. 101 rupees it is. 20 paise, not even brokerage is covered. Correct? So what I want you to do is why I am avoiding. Let's find that out. Please do take a note of this and observe. Okay, 22,550 current peak at 100.8. My first average will be at 88. Second average with a double buy at 72. Okay. Third average interval I will not do. Just then if it is not working out, then I will convert that into a writing position by taking extraordinary. Wait, Papu. Wait. Here. So basically, I am targeting, let's say, first thing without average. I wanted to exit at 110, but not happening. It has come down, and then I have taken at 88. So 12 means add 6 rupees to it. 94 is my average. So here I will be targeting total 102 rupees exit. And here, if say that it has gone to double buy and all, so here 100 quantities, here 200 quantities I am buying. My average would be somewhere around 84, like that. Here I would be targeting 95 rupees. Okay. Now, this is what I would like to do. I can do this on all the 4 days quite comfortably. But can it happen today? Just see that. Okay. That's what I want you to observe. Maybe maybe I will put this. Why is it not double clicking? Why no trades in second of uh, Friday? Watch this and study. Okay, this is what I'm going to put it in group. So just keep a track of this. That's all. Okay. Now it has gone to 106 rupees, 106.7 it is trading at. Okay. And I am targeting 110. All right. I think she's getting bored. I will have to leave now. So thanks everyone. Thanks everyone for joining in. We can meet another time. Enjoy and please do refrain from unnecessary trades. Yeah. See, I wanted 110. It's not going there. All right. Sure. Okay. Thanks, guys. Thank you so much. Take care. We'll meet again.